All right, gang, I want to do some quick analysis here on NASDAQ continuous contract going into the upcoming week of May 21st. Starting up here on the quarterly charts, I noticed something kind of interesting here. Obviously, we changed our quarterly downtrend last quarter in January, and we had that swing low form. And then this quarter, we broke out to the upside. But that aggression has left us a nice little fair value gap there on the quarterly chart, which as we know, once we tap into those, we usually get some sort of a reaction out of it. So I will be watching that as a spot of liquidity pretty closely. And you'll see there's a red line in there that I'm going to dive down into and show some interest in here momentarily. As you can see, we just took out some August highs on the non-adjusted continuous contract. I'm keeping my eye on that month. I know that high there was 13,947. I'll be really interested to see if we close inside of that. I do have a feeling that we're gonna close May inside of that 947, right? That's a reclaimed order block. Even if you go down to the 2-week, it's a nice, really reclaimed order block. And given that we have taken out that liquidity here, I think we're just going to do some distribution here a little bit. So we'll bring it down to the weekly chart. We do still have that upside fair value gap on the weekly up in there that we could go and aim for. Obviously, there's that one up at all-time highs, which will come eventually, but I'm not sure that that's really where we're targeting immediately. Like I said, given that we've gotten into sell side here, to me, it's a pretty clear buy model, right? Took out liquidity down there, broke structure to the upside. That's the high that made the low. So now we have confirmation that we're moving up, but we've also just completed a market maker buy model. So I think we're going to consolidate here for a little bit. I think a lot of people are going to be looking to get short immediately because of the aggression that happened last week. I'm not sure that that's what's going to go on. We may just chop here for a while, let some additional shorts build, burn some extra premium. I don't know if they're going to pop it all the way to 14.4. That's within a week's range away, so it's not impossible if they wanted to do that. Do that on some news maybe on Friday if things go really well. But as we drill this down, obviously we all know that it's pretty extended in the short term. We don't think, I guess we did close that fair value gap entirely. That low was 956, and yeah, we got all the way up to 960. So we did close that fair value gap entirely in there. So you can see we've got those equal highs stacked up there, and that is, like I said, a weekly fair value gap there. So so we may get some interest there. I know we had a fair value gap that kind of got dug into a couple of times way back in April of last year, but that's what the daily is looking like. If we take this onto a smaller time frame, I think, like I said, most people are thinking that we're going to be coming back down. By the way, that's the red line that's in the middle of the quarterly fair value gap down there. And then on the daily, you can see that that's basically just going to act as like our breaker, essentially. We got some, I mean, I guess you could look at that as a daily breaker right there, and then you have your fair value gap. So that's a pretty obvious area of liquidity that we're going to probably go and touch at some point. Maybe that's a 60-day target. It's a little bit far away unless we had some really horrific news of some kind, but you can see we don't get those kinds of huge down bars, even though we have this nice low resistance liquidity built up here. But I mean, you can see right on the daily, like we came down, tapped into that order block. I mean, structure's just been perfect to the upside. So even though we had a little bit of a come down on Friday, that's pretty, pretty normal given our weekly profile and just given how extended we were. So in the upcoming week, I'm actually kind of looking for that, just looking for some consolidation, maybe a bit of retracement. I think this is all of last week's range. I guess that all goes to Friday. So that is essentially the low that made the high. So that's kind of our dealing range that we're inside of right now. Really interesting to me, we didn't make lows. We didn't take out London on 3 consecutive days. We didn't take out the London lows on Wednesday, Thursday. Didn't take out the London highs on Friday. So that pattern is something I've been keeping an eye on for the mornings. But yeah, I'm not going to overcomplicate it. I'm looking for us to consolidate somewhere into that 635 range, maybe pop to the 800 range, and using that 0 to 100 concept, maybe make a beeline for 13.4 because we have a whole bunch of imbalances we got to square away. That 4-hour order block down there at 13.1 is juicy, but we have this 4-hour breaker block in the unicorn, so we expected that to be a breakaway gap anyways, so we got it. We'll be watching now for just consolidation and then a flip down to the downside. I'm not really going to consider this shift in structure until we get down below that 13.3 level. I know on smaller time frames we can look at that and say, okay, we've made that move, but going to stay pretty nimble because we have a lot of imbalances. I'm sure they're not going to be in a huge rush to just flush it down. So keep an eye on things. Here on the 1 hour, we saw that turnaround right at open on Thursday. And then Friday was just kind of a meltdown sort of day. I'd be looking for them to clean this up a little bit. So they're going to pop this up and take out at least some of that low resistance liquidity. We still have, I think, a pretty nice 15-minute fair value gap up top. Yeah, right up there. That would like some love. I was pretty sure they were going to get to it on Friday, but they decided not to. And that is above midnight opening price on Friday. So that's the one imbalance up there that I have some interest in, just given how much low resistance liquidity we have right there. But as we can see, we've already kind of gotten into some of these order blocks down here. On a 15-minute, we didn't touch the supercharge. That's the supercharge there at 797, as we can see. Last down close before that massive uppy. So I'll be looking for a reaction off of that level right there, the body of it on 13.8, and we'll see what happens from there. But getting in my head, that's what I think we'll do. Go down, get into that supercharged OB, get up here, clean this up, and then probably just chop a little bit this week. Nothing wild.